Hey, this is Matt from InvestiQuant. Today is Wednesday, February 3rd, 2021. Yesterday we saw a large move in the markets. We had a big gap up that continued higher from the open initially and then consolidated in the afternoon session, but we finished up with a sizable up day in the markets. And in the overnight session, we've seen pretty quiet activity. We've traded up a little bit, down a little bit, but we haven't gone too far from yesterday's closing price on that strong up day. So what I want to do this morning is take a look at this type of pattern where you have this large move up followed by a more quiet open in the next session. So let me describe this in Discover. We're going to look at all four instruments using an intraday open setup that is long, and that means it's getting long at the open of regular trading hours. Now to describe the open, I don't know exactly where we're going to be at, but right now we're trading within the prior day range. So I'm going to go ahead and just use that. And that means it could be an up gap or a down gap. And that's something that you can dig into on your own if you'd like to as we get closer to the open and know exactly where we're going to be. Right now we're a bit mixed. We've got a couple that are just up a little bit and a couple that are down a little bit in the instruments that we're looking at here. So I've got open within prior day range. Next, I'm going to describe that big move that we had yesterday. And I'm going to describe it by saying that it was the largest close to close move in the past 20 sessions. So we've got that pattern available in our unique move section that is right over here, and it's called the day after the largest rally in 20 days. So again, that means a close to close move is how that rally is defined, and it was quite sizable yesterday. Next, I'm going to go into the indicator section, and I'm going to say that it is above a 10-day simple moving average and above a 200-day simple moving average, and then click view results. And here we go. These are the results of going long at the open of regular trading hours, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you open within the prior day range following the largest close-to-close move higher in the past 20 days. This is taking place above a 10 and above a 200-day simple moving average. Historically, the S&P has 93 samples dating back to 2003. We've got 86 samples in the NASDAQ, 85 in the Dow, 85 in the Russell, so very similar sample sizes and pretty healthy sample sizes for that. Looking at win rates on these, none of them are really strong. They're pretty mild overall, with the S&P coming in at 53%, the NASDAQ a touch better at 56%, the Dow a touch weaker, 49%, and Russell very similar to the NASDAQ at 56%. If we look at the average win and average loss, you can see the average loss is sizably larger for the S&P than the average win. It is larger for the NASDAQ on the average loss compared to the average win. That is also the case in the Dow, and that is also the case in the Russell. So this pattern, although it has not shown a consistent directional bias for the day following that large move, it has shown that the larger moves have taken place on the downside. So if it starts to move to the downside, those moves have been larger historically than the ones that have taken place on the upside on average. So hopefully you found that helpful. Good luck today.